Welcome to the Tuesday edition of the Tech Stocks Daily podcast, where we dive into the pulse of tech, straight from Wall Street to Silicon Valley. Today, we're unraveling a trio of titans facing pivotal moments. Tesla grapples with workforce cuts and a daring push into autonomy. Microsoft ventures deep into AI with a strategic investment in the Middle East. And Apple's fiscal forecasts stir the pot, hinting at challenges ahead. Plus, Google shines with strategic moves, aiming to redefine technological prowess. Get ready for insights into the evolving landscapes of tech giants and what this means for the market. Stay tuned as we dissect these developments, offering you the crisp, insightful analysis you crave. Let's get into the heart of today's tech stock saga. In today's tech headlines, Tesla Inc. has again gripped the attention of tech enthusiasts and investors alike, this time facing a triple threat: significant workforce reductions, executive departures, and looming uncertainties about its product roadmap amid a focused shift toward autonomy. The electric vehicle giant, helmed by the tech maverick Elon Musk, seems to be traversing through one of its most turbulent phases yet, signaling a potentially transformative period ahead. The news broke that Tesla planned to axe more than 10% of its global workforce, translating into a staggering number considering the company's size. This move, explained by Musk as an effort to streamline operations and reduce costs, is reflective of the broader challenges the EV market is currently facing, including intensified competition, softening demand, and macroeconomic headwinds. Investors and onlookers were taken aback as Tesla, a symbol of hyper-growth in the tech and automotive sectors, signals a cautious path ahead. Adding to the complexity of the situation is the departure of senior executives, including Drew Baglino, Tesla's top engineering executive, and Rohan Patel, who managed public policy and business development. These exits have raised questions about the internal dynamics within Tesla and its impact on the company's strategic initiatives going forward. In particular, the absence of these key personnel might recalibrate Tesla's approach to its ambitious projects, notably its autonomy program and the development of its next-gen EV platform. Moreover, amidst these significant changes, Tesla's emphasis on developing its autonomous driving technology, dubbed full self-driving, has become even more pronounced. Elon Musk recently announced a price cut for the FSD subscription, a move interpreted as an attempt to bolster adoption amid lukewarm demand. Furthermore, Musk's musings about a future dominated by robo-taxis underscore a strategic pivot that could redefine Tesla's product roadmap and its place in the mobility ecosystem of tomorrow. However, this pivot also introduces a new set of challenges and uncertainties, particularly around the commercial viability and regulatory acceptance of autonomous vehicles. The recent developments at Tesla are not just a reflection of the company's internal recalibrations, but also mirror the broader transitions within the EV and tech landscapes. As traditional automotive companies accelerate their EV offerings and tech giants explore autonomous mobility solutions, Tesla is navigating a dynamically evolving market landscape. This navigational challenge is underscored by Tesla's stock performance and investor sentiment, which have experienced notable fluctuations amidst these announcements and strategic shifts. In essence, Tesla's current storyline is a complex amalgamation of cost-cutting measures, strategic realignments, and an ambitious yet uncertain bet on the future of mobility. As the company braces for its next earnings call, the tech and automotive worlds eagerly watch on, anticipating insights that might illuminate Tesla's path forward in these unpredictable times. The saga unfolding at Tesla is not just about a leading EV manufacturer adjusting its sales, but equally a narrative about innovation, resilience, and the future of transportation. In a big move shaking up the tech scene, Microsoft is once again leading headlines, but this time, it's about deepening its roots in the world of artificial intelligence with a strategic swoop into the Middle East. The tech titan has announced a colossal $1.5 billion investment into G42, an Abu Dhabi-based AI powerhouse, marking a significant step in Microsoft's global AI expansion strategy. Now, if you're wondering what's the big deal about G42, let me paint you a picture. G42 isn't your average tech firm. It's a beacon of AI innovation, boasting projects spanning healthcare, smart cities, and beyond. Its network and reach in the Middle East are unparalleled, not to mention its ability to pull off some tech wizardry both locally and globally. But there's more meat to the story. Microsoft's hefty investment isn't just about spreading its AI wizard hat wider. It's a calculated pivot to position Azure, Microsoft's cloud platform, at the heart of G42's operations. Azure will drive G42's AI and cloud services, extending Microsoft's cloud empire and AI might to new markets, especially where it has little to no footprint. And in a world sprinting towards digital transformation, cloud and AI are where the future battles for tech dominance will be fought. The partnership also whispers promises of a $1 billion fund to turbocharge developer and AI capabilities in the region, knitting together a network of innovation and talent that could propel the UAE and surrounding areas into a new technological era. Yet amidst the optimism, there are whispers of caution. G42 has been under the microscope for its ties to China, raising eyebrows in international corridors about data security and geopolitical tensions. Microsoft and G42 have sought to soothe these fears, promising compliance with US and international trade and security regulations, in what could be seen as a dance of diplomacy and tech ambition. To sum it up, Microsoft's bold play with G42 is not just about expanding its AI territory. It's a mix of market strategy, political navigation, and a dash of futuristic vision, blending together in a deal that could redefine tech leadership on a global scale. In today's tech news spotlight, Apple Inc. stirred the pot, making headlines for several key reasons that have kept the tech community abuzz. Firstly, the giant faced some choppy waters as an analyst from Needham highlighted potential disappointments in their Q2 report. The forecast is not looking as shiny as Apple might have hoped, with a prediction of lower iPhone sales and notable weaknesses in their Chinese market performance. Despite this, there's an expected slight offset due to better than anticipated revenues from iPad and Mac sectors. Apple's financial dynamics are under scrutiny, with sales expected to dip by 4% year over year, showing a tangible impact on its stock, which saw a slight decline. This discussion about Apple's financial health has opened up broader conversations regarding its growth outlook and investment in generative AI, which are perceived as hurdles in attracting new investors. Adding a different flavor to today's Apple news, another angle surfaced about how investors can potentially earn from Apple's dividends, especially ahead of their Q2 earnings. With a detailed breakdown, reports suggested a strategy for pulling a $500 monthly dividend income from Apple stock, albeit with a hefty investment, reflecting on the company's financial mechanisms and shareholder benefits amidst its challenging times. Moreover, Apple's scenario gets more interesting with the undercurrent of its artificial intelligence endeavors. Amid sluggish sales, Apple is eyeing a resurgence through the AI wave with its new Mac lineup expected to feature AI-capable processors. This move signifies Apple's attempt to catch up with its peers thriving on AI advancements, potentially heralding an era of technology rejuvenation for the Cupertino-based titan. To summarize, Apple's foray into today's news cycle unfolded stories of potential fiscal hiccups, dividend income strategies for investors, and a hopeful resurgence powered by artificial intelligence. Each narrative thread underscores the multifaceted challenges and opportunities Apple faces as it navigates through economic uncertainties and the burgeoning realm of AI technology. In today's tech spotlight, Google truly shone with a trio of fascinating stories highlighting its strategic moves and innovations. Firstly, Stifel analyst Mark Kelly emphasized Google's growth, attributing it to the company's AI prowess and premium video ads, elevating its market position amidst competitors and setting a bright trajectory for its future growth. Kelly's confidence in Google is so strong that he's upped the price target for Alphabet Inc.'s shares, signaling a bullish outlook on the tech giant's financial performance and strategic investments in AI and connected TV platforms. Google's not just about ads and AI, though. The company is geared up to wow the market with its second-generation foldable smartphone, the Pixel 9 Pro Fold, taking its foldable device line to an unprecedented level of integration within the Pixel series. This significant pivot in their nomenclature and product strategy hints at Google's ambition to blend innovation with utility, potentially setting new standards for flagship devices. Lastly, YouTube's move to clamp down on ad-blocking third-party mobile apps underscores Google's commitment to protecting content creators' revenue streams while nudging users towards a premium, ad-free viewing experience. This action reflects Google's wider strategy to balance user experience with monetization via strict enforcement of their terms of service against ad-blocking apps. Each of these stories paints a picture of a tech titan not just evolving but thriving by pushing the boundaries of innovation, market strategy, and user engagement. But what do you think about Google's latest moves? Are they leading the tech industry's future, or are there areas where they could improve? Drop your thoughts and insights in the comments below. We're eager to hear your take on Google's bustling journey through tech's ever-evolving landscape. Today's market sentiment, painted through the lens of major tech headlines, seems to be riding waves of cautious optimism, strategic recalibrations, and innovation-driven anticipation. The ambient narrative is not monolithic, but rather a mosaic of challenges and strategic bets made by titans of the technology industry. Starting with Tesla, the sentiment leans towards cautious scrutiny. The news of workforce reductions, executive departures, and an intensified focus on autonomous driving technology amidst a challenging macroeconomic environment signals a phase of significant transition. Investors and market watchers are likely recalibrating their perspectives on Tesla, balancing their long-term bets on innovation against the immediate hurdles the company faces. This mixed sentiment mirrors broader apprehensions about the sustainability of growth in the current economic landscape. Microsoft's headline-grabbing investment in G42, an Abu Dhabi-based AI giant, injects a dose of bullish optimism into the market. This move is seen as a strategic expansion of Microsoft's AI and cloud capabilities, positioning the company as a frontrunner in the global tech race. The investment is not just a financial commitment, but a statement of intent, reflecting a positive sentiment regarding the transformative potential of AI and cloud services. However, underlying this optimism are layers of geopolitical and data security considerations, hinting at the complexity of navigating global tech expansions. Apple's narrative for the day adds a nuanced flavor to the overall market sentiment. The discussion around disappointing sales forecasts in China and potential challenges in the generative AI sector contributes to a cautious stance on Apple's short-term outlook. Yet, strategies around dividend incomes from Apple stocks and advances in AI-capable hardware spin a parallel thread of opportunities. This duality underscores a sentiment of watchful anticipation as stakeholders parse through strategic choices and market dynamics. Lastly, Google's story arc adds a robust layer of optimism, driving home the potential of AI and premium video ads in shaping the tech giant's growth trajectory. The enthusiasm around Alphabet Inc.'s stock, the innovation buzz with the Pixel 9 Pro Fold, and a strategic stance on YouTube's ad policies collectively paint a picture of a company in command of its growth levers. This part of the narrative aligns with a sentiment of confidence in continuous innovation as a market driver. In sum, the overall market sentiment today is a rich tapestry of optimism marred by cautiousness, strategic shifts amidst uncertainties, and a unifying thread of innovation as a beacon for the future. Each story from Tesla, Microsoft, Apple, and Google lends itself to a broader market psyche that is as contemplative as it is hopeful, navigating the complexities of growth, competition, and technological evolutions in a rapidly changing world. Let's delve into Tesla based on today's news. Given the mix of workforce reductions, executive departures, and the heavy pivot towards autonomy amidst uncertain economic conditions, the decision to buy, sell, or hold TSLA stock isn't straightforward and warrants a nuanced approach. If I were looking at Tesla through the lens of today's news, I'd lean towards a hold position, and here's why. Tesla is no stranger to navigating through turbulence. The workforce reductions, though significant, might be seen as part of a broader strategic move to streamline operations and boost long-term profitability. Elon Musk's companies are known for making bold, sometimes preemptive adjustments in response to market conditions or in pursuit of innovation, like their bet on autonomous technology. This isn't uncommon in the tech and automotive sectors, especially for a company actively shaping the future of mobility. The departure of senior executives does raise questions about internal dynamics and could impact Tesla's strategic initiatives. However, transitions in leadership can also lead to fresh perspectives and innovations within the company. As for the intensified focus on autonomous driving technology, it's a gamble, but one that could pay off massively if Tesla can overcome regulatory and technical hurdles. Essentially, Tesla is not just selling cars, it's selling a vision of the future. However, these moves also introduce a state of flux and uncertainty that could lead to volatility in the short term. The market's reaction can be unpredictable, and the EV sector is becoming increasingly competitive. The strategic shift towards autonomy and cost-cutting measures to tackle the current economic environment does present a risky landscape, but also underscores the potentially transformative period Tesla is navigating towards long-term gains. Given these factors, a hold position reflects a balanced stance between the current uncertainties and Tesla's potential for future growth. It allows you to wait for more clarity on how Tesla's strategic moves pan out, especially ahead of its next earnings call, which might provide deeper insights into its financial health and future plans. Still, it's crucial for listeners to remember, investing in stocks carries risks, and it's vital to do your own research. Wrapping up today's market activity, we navigated through a diverse landscape of tech giants making significant moves amid evolving market dynamics. From Tesla's cost-cutting and focus shift to autonomy, Microsoft's bold investment in G42, Apple's fiscal forecasts and AI ambitions, to Google's strategic innovations, today's tech news serves as a vivid reflection of the rapidly changing tech and economic environments these companies operate within. Collectively, these stories provide a snapshot of cautious optimism, strategic recalibrations, and a relentless pursuit of innovation driving the market sentiment. They underscore the ongoing transformations within leading tech entities and hint at the broader implications for investors, consumers, and the tech community at large. Remember to join us again tomorrow for another video where we'll continue to decode the complexities of the tech market, providing you with the insights you need. Don't forget to like, subscribe, and share this video with others who are keen on staying ahead in the tech game. Your engagement helps us keep the conversation going and the information flowing. Catch you in the next video for more tech news and market insights. Thanks for watching to the end. Remember, this is just one story from our full daily show, which includes all the other news and an analysis of the day's tech market activity. If you found this video interesting or insightful, then please like, subscribe, and share it with others. Your support is greatly appreciated. Catch you later.